Hey, what's going on, BMC family? Just wanted to kind of cover what I've been seeing on the charts as of late. Kind of wanted to get more in depth with it just a little bit more, just because we are at key inflection points in just the macro market. And yeah, I felt like I'd be doing you dirty if I didn't specify exactly what I was looking at. So, historically speaking, the S&P 500 just leads crypto. So that's why I've been kind of focusing on that as of late. From a daily perspective, I know a lot of people don't have time to really do, like, 5-minute scalp trades where you're trading on the 1 minute and all that kind of stuff. We have lives. So I'd been kind of more so focusing on the daily charts, the weekly charts, stuff to, like, it's gonna be the same when you come back like a week later. Hopefully that's the ideology as to why I was going more long-term time frame. But to zoom out here, um, okay, so regarding the S&P 500, we've been in this bear market pretty much since the tippy top right here, pretty much like January 1st of 2021, pretty much late December, where we topped out, then we created the macro pivot low. Um, so this was the original low right here, but when price started kind of like breaking through it and losing this area as support, back testing it as resistance, huge loss, and it led to obviously the continuation of this nasty bear market. Obviously, we haven't even gotten into crypto, but you know how it's been, like 90% losses on alts, easy 99% on alts. I don't even want to talk about some of NFT projects and such, but I mean that's just the way how it goes. It's just cyclical. This happens. But anyway, yeah, we broke out of this long-standing resistance line 4 days ago. Let me turn off my magnet tool. It's kind of messing me up a bit. So obviously we had the top resistance. Didn't even back test this as resistance, but a confirmed lower high from the previous high. I'm sorry, a lower low from the previous high. And then we had a tip, rejection, and then a dump. But what was interesting and different about this particular move was this low and then a higher low right around here. Okay, low, higher low. Okay, so seeing that completely changed the market, and it did create this like little relief rally right after this dump. And yes, today candle close, bullish engulfing candle. This is huge. This is really huge. I was looking for a back test of this area. We didn't get it as how I had hoped. Um, this candle could theoretically be the back test. Let me circle it here, because from a standpoint of how the day opened and closed from that point, I completely forgot about this. But so let's just go from the context of the candle. So this candle on the 25th, it was just bearishly engulfing from the previous candle. I was really worried because usually if these candles break below the previous bullish candle, then you're creating a new trend to the downside. So I was like, oh my God, if 39.78 gets lost as some form of support, then we're most likely heading down. But the next day, the after candle close, price pumped. It just gapped up to 1.3% and even went higher and closed almost 2% on the day. It was huge, very, very huge. It created this gap ultimately. So I was kind of hoping to see some type of bearish candle to hopefully just backtest it to basically 4K flat. Didn't necessarily get there, but I do like the 9 exponential moving average as support when you are in a bull trend, and we are, because we have obviously the higher low instance right here. And we've been consolidating above this long-standing resistance. Like, this has been resistance for over a year, y'all. This has been a while. This is huge in regards to just the overall macro markets. Now, obviously, there's a lot of major events coming up this week. Actually, I think in the next 2 days, there's going to be a bunch of reports, like earnings reports from major companies are going to be rolling out. The Fed is going to be dishing out some, updates in regards to what they're planning on doing with like the interest rates and all that macro stuff. It's going to be pretty volatile, but from a technical perspective, just from my perspective, I'll be honest, I lean towards the technicals first, and I just let the news does what it does. I genuinely believe in technical analysis over anything what the Fed is doing, and from what I'm seeing right now is a bullish pivot. Obviously there's invalidation points, and that's exactly what I wanted to address, but there's also confirmation points that I also want to address as well. So we have this pivot high. Okay, so we had a high, and then as you can see right here, we had a lower high, which created a dump off. Okay, thankfully the Bollinger Bands, Bollinger Bands are really interesting of a tool. I like to use them as kind of like my support and resistance zones. This one's kind of customized. It does have a super trend installed into it, but I'm not going to get into the technicals of that. But essentially, this is a key level right here. This was the line in the sand. In recent intraday trading and all that kind of stuff. So if we see a daily candle close above 4,087.14 to be exact, we could realistically see a pump to the upside confirming this move. So how these this is a descending broadening wedge pattern, by the way. Descending broadening wedges are predominantly bullish. They break out like 83% of the time to the upside. So the confirmed breakout price target is actually 4,800. So in traditional stock market land, this move right here is like a moneymaker move. 17.45% is huge. So like that's a big deal. That is a very, very big deal. Obviously, what could theoretically happen is that yes, we confirm a pump to the upside, but then people get overzealous. They take out too much leverage or whatever. So it pumps, comes back down, then confirms it, then pumps to the upside, right? So that is still a possibility. Okay, so you can't be too risk on at this time. You got to be cautiously bullish at this time. That's how I'm at least playing it out. So that was just one shitty scenario that could happen. All right, obviously we could do something like this, which I think is more probable, but you could have a really, really overzealous pump to the upside, and then it could just retrace and erase all the gains. So that's something that I'm keeping my eye on, but I'm also cautiously bullish due to this particular old resistance line now flipped as support. I can argue that this is now support, and this is a confirmed breakout to the upside. That's how I'm seeing it. I'd feel way better if I saw a candle close above this yellow line, which hopefully we can get that in the next couple of days, maybe this week, hopefully. But yeah, okay, I'm going to move away from the S&P 500, and I want to go to Bitcoin. So let's start out with Bitcoin. Whoops, I have a couple of indicators there. Okay, so we broke out of this triangle pattern, and we've just been ripping to the upside. Now, what's interesting is we're consolidating within this range of 23.9 and 22.2. You can discern that due to the wick lows and wick highs of these current moves. We're still consolidating above the 9 exponential moving average, which is phenomenal, but what's kind of freaking me out, not gonna lie, is on Bitcoin, we do have this bearish engulfing candle. I do not like that at all. We did get some, we did kind of get a relief rally a little bit today, but I don't necessarily like that. Now, I could suspect, given what I'm seeing on various indicators here, RSI is not looking good. We have been in the overbought zone for some time, and then it looks like the RSI is kind of getting rejected off the 70. But the thing about moves like this is that what could happen is that it could go sideways for a while and then literally bounce off the 50 and then come back up for another crazy move. So at this time, I'm keeping my eyes on this range. And I can show you Ethereum. Ethereum is a little bit more visible. It's kind of revealing what's kind of happening in the market, but I just wanted to give you a slight update. These are strong support and resistance areas right here on a daily perspective in regards to it. So mark these prices down. So if you see like price significantly above, like 23.9, we're most likely going to go higher, guys. 25.3 is a significant area of resistance for me, but in all honesty, I want to do a Fibonacci retracements just so I can show you if this is a pivot, like, or maybe like a retrace zone, worst case scenario. So I'm trying to find my tool. There it is. Okay, so now I need my magnet tool. All right, so let me get that wick high to the bottom wick low. Okay, so if we were to break to the downside, worst case scenario, we usually see the 0.618 and the 0.32 as lines of support. Okay, so in that case, worst case scenario, I would kind of see a retrace or a potential spot buy zone to then kind of ride the wave back to the upside. Usually the 1618 gets tagged, so 29.2 it looks really good, and also it aligns with like this area. So when we usually break levels, we usually back test them as resistance or support. In this case, because we broke down, we never back tested this area as resistance. And you know, there was like the FTX fiasco and stuff that kind of stopped price from really going to that level. There was just so much bearish negativity within that area, so we just kept on dumping and dumping and dumping. So we never really got back to that area. So honestly, seeing the 1618 here and seeing this level as a key zone that was never really tagged as resistance, I do see this level eventually getting hit. It could be within the coming months, it could be, you know, by the end of the year, I have no idea. But this is a key level and it's like a magnet to me right now. So I do feel that yes, like we are seeing a bearish engulfing candle on the daily and consolidation between this range of 23.9 and 22.2, but realistically, even if we do dump, ultimately I do feel like we are eventually going to be tagging this area. That's just a theory of mine, but I want to go into Ethereum now so I can give you a clear picture as to what I'm kind of seeing. So excuse the crazy, I trade ETH a lot, so I get a lot of lines and stuff like that, so it probably looks insane. Yeah, let's zoom in here. So these are the key lines that I'm looking at right now as something to be focusing on. So triangle patterns are interesting. This is pretty much a triangle. This is a bullish pennant. Now the reason it's a bullish pennant is because we are coming off a ridiculous rally and now we are consolidating into a triangle pattern. Usually when you consolidate to a triangle pattern within a trend, it usually means a continuation pattern. Now the statistics are 60% to the upside, 40% to the downside. So yeah, just tread lightly in regards to that kind of stuff. But ultimately, what I'm expecting is consolidation for a little while. So I have this white line right here for a reason. So I did a calculation. With triangle patterns, usually they find a resolution of the pattern 70%, at very least 70% of the way of the pattern. So if, thanks to this measuring tool, I go to the candle beginning all the way to where the lines converge, and then I got, you know, the 190 number. So I divided that by 70%, and then I got, you know, this area. So essentially, my theory is that we are going to be consolidating within this level at the very least till February 10th. It could break out a little bit before, it could break out a little after, but around this time, I feel that we are either going to find resolution above the zone here, just how Bitcoin had a zone, had a range. Ethereum does as well, so it's at 1,656 and 1,500 flat. So essentially, breaking out of this zone here, or this pattern, will determine the trend that we're going into at this time. So realistically, because it is a bullish pennant, I am leaning more bullish, I'll be honest with you. But if I see a 4-hour candle close below this line here, this blue line, I'm most likely going to be converting some of my crypto into stables and then just, you know, maybe buying around either at the 0.618 or the 0.32 depending on how intense the move is, or vice versa. Like if I do see a candle close breakout above this red line and a 4-hour close above this Fibonacci level, which is at basically 1,656, then yeah, I'm going to be moving some of my staples into, you know, my favorite altcoins, and we can get into altcoins if you're down. So I've been pretty biased in regards to altcoins. I've really just been looking at two lately, and I'll give you reasons why. So I really like Quant. I really like Quant because it's like artificial intelligence mixed with blockchain technology, and this is a chart where Quant versus Bitcoin. So I like to swap into these. So even though it doesn't look all that great, because it's been going choppy, this is like way better of a chart than like 99% of all altcoins versus Bitcoin. Okay, so it is consolidating, and it recently broke out of a major line of resistance. And I did a Fibonacci extension to it from the wick top to the wick bottom. So look at this bull run, just real quick. Let's just relish. I don't know if you had any quant. I was a big quant fan around August. But like, yeah, from the bottom of this move, let me turn off the magnet. From the bottom of this move all the way to the top of Bitcoin, sorry, of this rally versus Bitcoin, it took 124 days for Quant to 6x almost against Bitcoin. Obviously, you're not going to buy the bottom, you're not going to buy the top, but you're going to get somewhere in between. That was a hell of a rally. And it's already done a retrace. I do think it has a little bit lower to go, but yeah, like I already kind of bought into this, so I'm probably going to be dollar cost averaging if price hits, you know, 0.0059 or 0.0056, or maybe it could wick below 0.0057. But yeah, if I see a daily close below this area, then we're most likely going to head lower, which would suck. But you know, ultimately, I do feel that this is a pretty nice consolidation above previous resistances. And yeah, from a Fibonacci level, I don't think it's necessarily complete of a move. There's still probably like 9 to 10% left. But I like to dollar cost average into positions. I don't like to go 100% into anything, obviously. Like, you know, anything that I do for like swing trading or whatever, it's like at maximum 5% of my portfolio. But anyway, I digress. I'm waiting for the 0.382 for Quant specifically versus Bitcoin. And Quant versus USD. Now, I kind of mentioned this a couple days ago. We do see kind of like a head and shoulders pattern, and the measured move would take the price back all the way to 250. So even against USD, Quant from a macro level is doing well. It could retrace, right? It could dump another, say, it could probably go to 120. It could dump another 16%. But I don't care, because at the end of the day, I know where it's going, and I feel pretty confident that you know, we can get a 66% rip off of this move, which I do feel like this head and shoulders is on the verge of confirming. So that's to be determined. Obviously, like if you know the S&P 500 chart, you know, shits the bed the next day, you know, these trading setups aren't necessarily all that valid anymore. So, but as it stands today, I feel that much more confident that these moves are more likely to happen more so than not. So Quant is really, really good versus Bitcoin. Now, Monero. Monero is another good one because it had like a nice run up, just like Quant. It's been going crazy. Let me go to the daily chart. Yeah, it's been going hard for a while now. You could even argue that it bottomed out like a couple, you know, like 720 days ago. So it's consolidating now. But since then, it's done 180%, which is not bad. It's not quant level stuff, but I mean, it's pretty decent. It's been in a bear market for some time now versus Bitcoin, but now we're creating higher lows, and you know, it's consolidating at this time. But I'll be honest with you, I'm not really interested in Monero. I'm more interested in Quant, and my favorite of them all is Litecoin. Now I showed you, quote unquote, my bullish charts versus Bitcoin, but nothing compares to Litecoin right now. It is the most bullish chart against Bitcoin. It's had its bear run. Okay, it's had its bear run for some time. Okay, whoops, I moved the line by mistake. But it's done significant things. Let me measure this move here from the top to the bottom. 100 and yeah, Quant had like a great move and stuff like that. But it's the top 30. I think. What is Litecoin right now? I don't remember what rank it is. But this one looks amazing to me because we're getting a double bottom right here. This is a double bottom move. And if that confirms, we're going to see a breakout eventually. Okay. So if that actually happens, sorry, I'm doing some TA like in real time because I haven't really done this yet. But yeah, hold on. That wasn't what I was wanting to do. There it is. Hello. Ah, the freaking magnet tool. It's so useful and yet so distracting sometimes, depending on what you're doing. But yeah, so if this W pattern breaks out, whoops, we are looking at a pretty substantial move. Obviously, you can wait for a candle close to break out from this level, and there's rips, but that's still 20%, 21% versus Bitcoin. Okay, so if Bitcoin is going 10% versus USD, and then Litecoin's going 20% above Bitcoin, that's multiples of US dollars. So that's just something to keep in consider. Trading within alts and Bitcoin is a nice little life hack in life, but overall, yeah, this is a real nice range. But my favorite chart versus Bitcoin is definitely Litecoin at this time. But ultimately, that will not matter if the S&P decides to just completely disrespect technical analysis, break back below this line, and yeah, usually when you get an invalidation and it breaks back into a pattern, that's most likely a confirmation of a lower low, and we're probably gonna hit the bottom edge of this area. I would hope not. I would definitely hope not. But yeah, we are getting some sell signals, but the RSI hasn't even tagged the top side, so that's why I feel that there's still more room to go. But yeah, invalidation levels would be pretty obvious. So this exponential moving average is the 21 exponential moving average. I think it's, yeah, the 21. Yeah. So if I see a candle close basically below 3,978 at this time, obviously this is a dynamic moving average. So by the time, if that does happen, then it'll most likely be more so around 4,000. There's a psychological level to it. Realistically, if price breaks below 4K here, then yeah, we're most likely not in a good spot. And if that actually ends up breaking below this line, that's even worse. But you just got to be prepared for the worst, but hope for the best. And thankfully, we've had 4 days of consolidation above this resistance line, where I feel more confident saying like, yeah, we actually successfully flipped it as support. The bulls have actually flipped this as support. And don't be surprised. Like, okay, the Bollinger Bands here. I installed a volume weighted average price super trend. So it's kind of like a hybrid of Bollinger Bands with the VWAP. I know that means nothing to you probably if you don't know anything about trading, but essentially it just means that price is below the super trend. Okay, so technically these are the lows. Okay, so we're technically like right here, if that makes any sense. And we still have yet to see the super trend go blue. Okay, so that's why I feel more confident. It's like, oh, okay, so I'm more akin to thinking that we're right here at this point in time, and we still have more room to go. And hopefully, if and when that retrace does come, we can actually solidify this area as support as opposed to just breaking through it. So yeah, all right, that was way more than I thought it was going to be, but I covered a lot. I hope this was insightful for you all. Yeah, if you're still listening to this, thank you so much. But yeah, I'll talk to you all later. Peace. Bye.